Congratulations on the IPO. Obviously oversubscribed. That order book was closed pretty early. But typically when you see a company go public, you're talking about young companies, 5, 10, 15 years old. This is a company with roots that go back 100 years. What's the growth story that you offer investors here in the secondary market?
Well, first, thanks for inviting me today. I'm a frequent viewer, a big fan, and it's a pleasure to be here today. You know, our story is one of steady growth, one that has been consistent, robust growth over a long period of time across numerous product categories. And our investments going forward will continue to be in growing those categories as well as in new product development. You know, 21% of our revenue in 2018 came from products that were less than 3 years old, and we have a very strong new product pipeline to be able to continue innovations and new products in these categories for the next several years.
All right, so on that note of innovation, I want to get your thoughts really on how you're keeping up with the changing way that people consume items. We know that for the most part, a lot of the items that you make are mostly disposable. How does a company like that keep growing in an era of people banning plastic straws and plastic bags?
Well, a very good question, because we've been investing in sustainable product solutions across all of our categories for years, and in commercialized products that offer consumers a choice across all of our broad categories. Things like 100% recycled aluminum foil, waste bags that are made with post-consumer recycled plastics, a whole line of compostable plates and cups, and unbleached parchment paper, for example, that's fully compostable. And for those consumers that don't want to use a plastic bag for sandwiches, we have fully compostable wax paper Reynolds kitchen bags.
So, Lance, when you were sort of shopping this around to investors during the IPO process here, what was kind of the main selling point here? Because the demand for this, compared to some recent IPOs that we saw at the tail end of 2019, the demand for this seemed to be a lot higher. And I don't mean to sort of be dismissive, but you know, you make plastic wrap and aluminum foil. Meanwhile, you had these high-flying tech companies that couldn't even get out of the gate. What was it about you that was much more attractive to these investors?
What's attractive to investors about our company is steady, proven growth over a long period of time of both top line, which includes volume, as well as EBITDA growth. Our compounded annual growth rate for the last 5 years has been over 5%. And that, combined with a commitment to pay a dividend of 50% of net income, when these resilient products and categories, which are demonstrated growth consistently over a number of years, ensures that there's a steady investment thesis here, and we generate a lot of cash. In fact, the last 12 months was over $506 million. So that ensures investors are going to have a total shareholder return that is very attractive in the long run.
So I like the contrast that Romaine and you have painted between the high-flying IPOs, the Ubers, the Lyfts, and Reynolds, which again is a company that has roots going back years and years. Did you consider at any point changing or delaying your IPO, your listing, because of what we've seen from the likes of Uber, or was it more reason to go forward with it because you offer a different value proposition?
It was exactly the latter, just as you described. You know, we have a very consistent, durable demand and an investment thesis that's compelling, particularly as you look forward with some of the new products added to our consistent history. You know, we've demonstrated cash flows, consistent earnings, and not a high growth algorithm that we're promising, but proven growth from a historical past.
Lance, we have to ask you about kind of the news of the day, the news of the week. Of course, that's the coronavirus and just the concerns about how that could impact global growth. What are you hearing in your universe with regards to this?
Well, on our company, we have 16 plants in the U.S. and one in Canada. All of our raw materials are primarily from North America from a raw material insourcing standpoint. From that standpoint, we're insulated from this. 99% of our revenue is in North America.